Welcome to another stage analysis video. It's Sunday the 26th of March 2023. I'm going to start off with the S&P 500 tonight, looking at the weekly chart here. We've got below it what we call the combined percentage of stocks above their 50-day, 150-day and 200-day moving averages chart, which is something I do weekly in the members service. It's a very good gives a very good idea of what's going on under the surface of the market in terms of where the majority of stocks are. And we determine, basically, this is down the side here, the percentage from 0 to 100%. So what we consider below 40% is considered the stage 4 zone, 40 to 60% is the stage 1 or stage 3 zone, and above 60% is generally the stage 2 zone. This is a rough guide. If you go back through the historical data of this, generally the majority of a stage 2 advance will occur with the percentage of stocks above the halfway point of the chart, with dips into the middle range and above, whereas in the stage 4 decline, you will see it obviously on the opposite side of the scales. So at the moment, although technically the chart is in a stage 1 environment here, we've had a failed stage 2 attempt recently in multiple indexes, but it's currently sitting around right at the midpoint, just hovering above the 30-week moving average and underneath the 10-week moving average there, sitting just above the 200 there at the moment, I believe. But the percentage of stocks at the moment is all the way down at just under 30%. So below the previous week at 28.61%, but you can see it's actually dropped off dramatically by over 40% since the high at the start of February. So I think it was the 2nd of February where it topped out at 71.15%. So it had been moving into stage 2 type environment, the index was attempting to break out into stage 2, but then failed, rolled over, has come back into the range again. So we're still within this broader structure that we've been in since last May, basically. So we're coming up to 10 months now of going sideways, basically, even though the market has been broadly in a downtrend during that time, with lower lows and lower highs. We only more recently got this up thrust, which has put in a higher high, but as we said, only for 1 week before coming back into the range again. So still within this broader sideways structure, which could still resolve either way. But at the moment, from the percentage of stocks perspective, we're in the stage 4 zone and in what we consider a difficult environment. So until that changes, we start to see a break to the upside here, and the percentage of stocks starts to get back out into the middle range at least, then obviously we're still in a difficult environment here. We look at let's go on to the daily chart actually. So actually, let's go back to the monthly first. So this has also got the longer term picture of the percentage of stocks above their 50-day, 150 and 200-day combined chart, which is I consider the short, medium and long term moving averages combined. Basically, you can see during the stage 4 declines, as I was saying, you tend to be below the mid-range, underneath that 40% level. You can see here the majority of the price action is, when it's in a deep stage 4 decline, is below this area. So you can see all through that 2008 stage 4 decline, these little blips back here in 2010 got below, back in 2011 the stage 4 through there, 2015, 16 double bottom, and then the more recent 2018, as you can see, and the 2020 COVID lows. So this most recent one where we started to get below the 40% level here, so you can see we moved. It's all through this area here, and we have started to show some strength in the near term, as we said, but we've now undercut that December low there, and we've got back into this lower range again. So although the price action is obviously looking a little bit more neutral here, we haven't yet, from a percentage of stocks basis, got back into a more neutral position. So it's actually in a more dangerous position here. So let's see how that plays out. But on the daily chart, at the moment, the large caps are sitting just above the 200-day moving average, and the closed above the 21-day on Friday. Percentage of stocks above their 20-day moving averages was moving just above its 30% level at the moment, 31.2% here, but still within this short-term downtrend channel. So we consider it in a downtrend when it's below this minus 1 ATR level here. So when the price action is getting below that level, it tends to be in a downtrend. And when it's getting above the plus 180 ATR level here, we tend to be in a short-term uptrend. So at the moment, we've just moved above that again, and we're back in a more neutral position between the -1 and the plus 180 ATR level. So we're in a very neutral position at the moment, but still within this downtrend channel we've been in for the last 2 months here now. So whichever way this breaks will give us obviously clues to the next move here. But if we compare this to the equal weighted chart, this has been, you can see the mega caps have been taking over recently since the start of March, as the broader index here, the S&P 500, has actually been much weaker than the S&P 500 has been showing, and we're sitting right at the lows. Look back to December here, which it's been attempting to undercut multiple times, but attempted a little bit of a reversal on Friday. We did have a lot of undercut and rally type moves. I think it was the largest reading for the undercut and rally scan that I've had for a while. So potential for a rebound attempt, but you can see it's in a rebounding from quite a weak position, still a few percent below the 200-day moving average. Got a lot of work to do to get back up to the stage 2 type level again. Still would have to make a 8 to 10% move just to get to the breakout level once more. So at the moment, we're still in a broader stage 1 structure, but we're in a dangerous position here, as if this rally attempt from Friday does not follow through and instead starts to roll over, and obviously we could start to move down and back into a more stage 4 type environment again. So which obviously the market breadth at the moment is currently indicating, but doesn't mean that will be the case. If we look at the Nasdaq composite, you can see at the moment attempting to move out above a near-term pivot high here. Made 3 attempts last week, but didn't manage to push through. Friday's attempt was a little bit weak there, lower volume, so we need to see some strength through there and for this to start to push out and get clear of this 1300 level, potentially start to push that out into stage 2 more convincingly. At the moment, had an initial attempt to move into stage 2, which ran into resistance straight away. Has been trending, pulling back into that 200-day moving average ever since. So look at it from a weekly perspective, if I've got the weekly chart, where are we? Back. Weekly chart. You can see obviously the early attempt to move out into stage 2 here. It's pulled back in, but it did undercut the 30-week moving average here, so it would have been stopped out. So it's a failed stage 2 attempt there, and then it's now attempting to rebound again. So looking for this 1300 area to be overtaken in order for it to move into stage 2 again. But if it continues to roll here, then we could obviously move back into stage 4 quite easily. The Nasdaq 100 has been stronger because of the mega caps and the fact that it's got no financials in it. So financials obviously have been a big lag on what's been going on in the broader market. So there's none in the Nasdaq 100. So it's been a lot stronger. About 50% of the index is weighted in around 10 of the major mega cap stocks. So the likes of Apple, Microsoft, etc., Google, Amazon, etc. So this is very, very strong near the top and potentially close to a potential stage 2 breakout. Again, this was attempted to move into stage 2 here. If we look at it on the weekly, it was an early breakout attempt from this one, which potentially held. It did undercut that 30-week moving average again there. So there's a possibility that was stopped, but now it's attempting to regain that level. So benefit of the doubt would give this, just as it's sitting at resistance here, it's either late stage 1 or potentially really early stage 2 at the moment. But obviously some more work to do here. Not convinced at the moment, as it hasn't managed to break these support levels or the broader structure that it's been in for a while now, again since that May consolidation last year in 2022. So we can start to break this 13,000 level more convincingly, then be much more convincing that it'd be moving into stage 2. You can see relative strength in the near term starting to move against the S&P 500 since the start of the year, starting to outperform. We look at the that was the bigger chart. If we look at the equal weighted chart of this, you can see it's not quite as strong. As same with what we were seeing with the S&P 500, has been outperforming versus the S&P 500 since the start of the year, but it's underperformed in terms of what's going on with the Nasdaq 100 normal index. So you can see the difference if we flick between the two charts. So you can see this is obviously made a slightly higher high this week, whereas the equal weighted chart is still a long way below that level there. So that would be the same level. So it's much, much lower. So not getting the same kind of strength. So the mega caps are definitely leading at the moment. Whether they continue to lead and whether it's a very narrow leadership at the moment, which we saw from the watchlist scans this weekend. So only the mega caps and a few small select groups are actually showing that strength. The rest of the market is a lot of, as I said, a lot of undercut and rally attempts, but they're generally all at the weaker end of near-term ranges or recent pullbacks, which have been quite severe in a lot of cases. So there is potential for spring type action for them to rebound this week, but we will obviously, it hasn't happened yet. We need to see how that follow through plays out. Russell 2000, I've marked the percentage for it to get back towards that stage 2 level again. So it had a failed stage 2 attempt at the end of January, early February time there, where it started to roll over again immediately and came back into the range. So Wyckoff short entry point back into the range there, as you can see. It started to move back down again. Now it's pushed down towards the recent lows, so would have hit some near-term targets there for those using Wyckoff short-term targets. So, but again, undercut and rally type look to this one here. It's got a little bit of a double bottom with an undercut. So near-term pivot here. We can start to get back above that, start to look a little bit stronger again, but still got to get back to the 200-day moving average, which I believe is around 4.5% there to the 200-day moving average, and it's still around 11% to get back towards that stage 2 level again. But now with two recent highs from August and the February high there, I would say that 200 level there is more the level that's more significant now, as we've got two major levels to get through. So if we look at that from a percentage basis, in order for this to move out into stage 2, it's got to make over a 15% move currently. So it's got a lot of work to do at the moment. So, and you can see the near-term relative strength change in this. It's massively weaker than what we've been seeing in the large caps at the moment. The micro, if we look at that from a weekly, you can see that a little bit more. So I had that prior week where it attempted to move up into the 30-week and squatted, came back in again. And then this week was a bit more of a consolidation, so with that undercut, but still within this broader structure again. So you can see there's a broader range that it's within, with a few failed attempts here. So looking for that 200 level to be broken convincingly in order for it to move into stage 2. But we've got this near-term resistance in the Russell 2000 for it to break. So if it can't get back through this area of resistance, then potentially could roll. We could see a stage 4 continuation breakdown potentially. Micro caps also doing the similar kind of thing, much weaker than we're seeing. Obviously undercut that December low a couple of weeks ago, holding at the lower low here around the 100 level. Potentially could get a rebound attempt in this, as it is attempting to consolidate and stall here. So we could get a bounce, but if that bounce can't follow through, then again you could see a stage 4 continuation. But if it can follow through and get a move up in a higher low forms, then potentially could start to recover. But the more speculative areas, these micro caps, etc., are showing a lot more relative weakness. And as we can see from if we go back through the charts, generally when the market, if I change this to a longer term here, it generally tracks with what the market's doing. So when we've got a stage 2 on, this will be in stage 2. Go back to 2019, not so much, a bit weaker, but obviously whenever the market tends to be in stage 2, then the micro caps tend to participate. They're more speculative. So, but at the moment they're definitely not participating. So there's a bit of a divergence going on with what's going on in the broader market here. Obviously lots of people are expecting a stage 2 move based on where some of those mega caps are sitting and the Nasdaq 100 is sitting. But obviously there's a lot of divergence going on in the market at the moment. And the VIX, we did have a big spike over the last few weeks, which has come off a little bit. It's got back underneath the 200-day moving average here at the moment. We obviously had this big big upsurge in volatility with the banking crisis. So hasn't affected the S&P 500 too badly, but obviously we've seen some of those sectors, the banking sectors especially, and any financials and related areas have been hit very hard, and we've seen a lot of change of behaviour moves. We did have a lot of stocks that had come in, made stage one type bases and started to break out, and they were moving higher in stage two, and now they've done this, come back into the range again. So we were had a 30-week moving average, for example, starting to move up, and some of them have just started to break back down again and even start to undercut their original breakout levels. So starting to show a bit of a change of behaviour. Could still just be in a sideways volatile range potentially, but there's been multiple stocks and groups that have had what we call failed stage two breakout attempts, where they moved into stage two briefly and have now undercut their breakout levels quite significantly. So there's a lot of that behaviour going on. So definitely something to keep an eye on.